All right, so here's the deal with this. My model is on fire right now. So my Ichimoku dynamics are working really well. The Stoke model on some time frames on some coins is working spectacularly well, some not as well, right? So check us out, right? Like we have CHC running up, look at the reset, right? So we actually had a falling wedge here, which is my favorite bullish breakout formation. And we popped out of that. Now I missed this, I just didn't see it earlier. If I saw it earlier, I would have made a killing on this entry. However, there's still an entry left to make. Resistance, support at the bottom of the cloud. Ichimoku dynamic support. Resistance at the top of the cloud. Ichimoku dynamic resistance. Retracing as we're maxing out on the hourly Stoke. Come back down a little bit, have a chance to get in. Probably come back down to the 55 EMA on the next attempt, break out from the top of the cloud. If you look at the 4-hour model, very, very bullish reset on the Stoke. Again, locked in. So the only reason I'm not getting into CHZ now is I think we may come down a little bit. If we were to break through the top of the cloud, I'll set a notification alert right here. If we break the top of the cloud, we're probably just going to run and pump. So I'm going to FOMO in at that point. But if we don't and we come back down, we should get down to right where the 55 EMA is. Maybe, probably not down to the bottom of the cloud because we are bullish. So we're overall going to trend up. So we're probably going to dip slightly over a couple hourly candles to where the 55 EMA is. Then I can buy in, place my stop loss, a few percent below the entry. Maybe even put my stop loss below the bottom of the cloud and the 99 EMA, although if I did that, it would be like 6% below my entry. I would only do that on like a midterm hold or something. So I'll decide how to play that. But CHC is a good example. I mean, my model is locked in right now. So if you look through a bunch of the charts, you'll see a lot of assets are pretty high on the hourly Stoke. So short term, we probably have a little bit of a dip. That's why it's not a good time to buy in now. Like BAT, I wouldn't buy in right now because there's a good chance we come back down a little bit. But we're overall trending so bullish that I don't want to necessarily, I don't want to miss out. So it may still be worth it. Also, there's a good horizontal support and resistance here. Remember, I tell you all the time, you do this enough, and you practice and study enough, you'll notice these things with the naked eye. You don't need a chart with a line on it. You could just see it, right? Boom, boom, and then you look left, and you'll notice big rejection there. That's a key support resistance. So if I were to buy right now, my stop loss could go below the bottom of the cloud, 2.5% below my entry. However, there's a good chance we come down and dip a little bit. So I'm going to wait and see what happens. The kids are upstairs banging on the door, so I have to go. But if you look at all the charts, that's what we're looking for. Now, that's on the hourly model I just showed you. If you look at the 4-hour model, a lot of things are very bullish on the 4-hour. NEO, not as much, but take a look. Like, let me just go from the top. HOT, I said I might have gotten in a little early, and that's why, although the Stoke model on HOT 4-hour isn't that good right now. It's a little bit zigzaggy, so I'm not too worried about that. Look at FTM. It's turning up right on the 786 fib retracement and the 99 EMA. That's really... Hey, I'll be right upstairs. I'm finishing recording a video that you are on. I'll be right up. Bye. So, perfect retrace. Each of my dynamic support. Boom. Bounce on the 99 EMA. Support from the 55 EMA. Support from the 55 EMA. It eventually fails. What happens? Bounce at the 99. Those are each of my dynamic supports, and they're absolutely crushing it. On FTM, this is a falling wedge that we're in as well. So, right now, we are going to break out of this falling wedge. Now, this is... not a great falling wedge. I mean, I guess it still is. I was going to say maybe it's more of a pennant, but or a bull flag rather. But it's actually pretty good. I like that we have the 786 fib retracement right here where the 99 EMA is. So that's an excellent confluence. That's two different indicators that are giving us a strong support right here. And the 4-hour model on the Stoke is incredible. Now the hourly, let's see. See, the hourly's high and it's coming back down. But since we're bullish, that doesn't necessarily mean we have to retrace far. So like, look what happened here. We moved up. And you got a pretty decent retrace on the swing down. Over here, on this swing down, pretty decent retrace relative to the move up. Now, I said last night with the whole up arrow, or was it this morning when I posted in the group when I said FTM's going to break out, I was really confident about it, and I still am. But I didn't have any precision short-term entries here. So let me see. If I were to buy in right here on that 786, and we get a short-term dip on the hourly, we're not going to go below the prior bottom because we're now bullish. We're turning up on the 4-hour. So before we were getting these bigger swings down, I don't think that happens now. I think now we get an aggressive move up. So if I were to buy right here, my stop loss would have to be 5% below my entry. Now, when I told you guys about FTM potentially breaking out, I got in, but that was more of a midterm hold. It wasn't a short-term precision entry. So 5% would be too risky for that. I also noticed there's a horizontal support right here. Is that relevant back here? Not really. Oh, I guess, no, not really. So I don't have that good of a short-term support structure for a short-term, low-risk precision entry. But I'm very confident this thing's going to go up from here. So it's a tough decision. I mean, I might be able to buy in here and place my stop loss 3.5% below my entry, but you know what I think I'll do? I'm going to set a buy order that's a little bit lower. So since I think we might have a tiny, tiny dip, I don't think it's going to be a big dump or anything. If I do this, I can set my SL less than 3% below my entry, and I'll set a buy order right here, right around that price. So my SL could then go like 2.5, 2.6% below my entry. That would actually be pretty good, and that would be a great precision entry. I still have a position. I just bought right here on the 786. I'm in this trade because I'm very confident about this. I really think it's going to break up. But I'm also going to get into a low-risk precision entry. So I'm going to set a couple buy orders right here. As soon as I stop recording this video, I'm going to set a couple buys right there, and then as soon as they fill, I'll set a tight stop loss just 2.5% below the entry. If they don't fill and it just breaks out, I'm already in a position, so I'm already going to do really well. So no matter what, I'll do well. But again, just to finish what I was saying before I shut down, I still have some open trades here that look really good. But if you look at the 4-hour model, like on Key, really confident about Key as well. Dash. Looks like it's actually getting a premature bullish reversal, and that 222 is still a really strong support. Dash was a great precision low risk entry. My SL was 2.8% below my entry. I'm still in that. RVN still holding that. That's another trade that hasn't broken out yet, but still has a very good chance to. We're starting to turn up a little early on the Stoke, so that could be a good sign. Ethereum is pumping, so if Bitcoin could make a move like that, it could pull all the altcoins up. So you want to look for assets that have a bullish Stoke right now, that have recently been locked in, like the examples I showed you, that have been reliable of late. The ones that haven't been reliable, that are just all over the place, like over here, those aren't reliable. But for the cases where the Stoke model is locked in, XLM, even though I got stopped out of my short-term trade on XLM, never mind. This was a long-term buy, and I never set a stop loss. So in this case, I'm still holding it. But if you look for areas, look for coins where we have that reset on the Stoke. Let me see if I can find one more example. Like ADA. ADA, perfect reset on the 4-hour Stoke model. We're sitting right at that 786, the 99 EMA, and the bottom of the cloud. The bottom of the cloud on the 99, that's double Ichimoku dynamic support. So that's Ichimoku confluence, right? We broke into the cloud, big bounce from the bottom of the cloud, big rejection from the top of the cloud, and now we're back to the bottom of the cloud where the 99 EMA is, so we now have two of my Ichimoku dynamic supports providing confluence. Look how strong the 55 was, and then when the 55 happened to fail, the 99 was really strong backing it up, right? So this is a really high probability bounce zone right here, and we also have a falling wedge here as well. And with this support, I mean, I'd love if it was bouncing off the trend line, but the bottom of the cloud is the key support here. If I were to buy right there, my stop loss could go less than 3% below my entry. So this is actually, ADA is a really good potential low-risk trade. So let me do this. I'm going to set my buy orders as soon as I finish this video. Again, enter right around the current price. I may adjust this. There would be, my stop loss could be just 2.75% below my entry, so it has the 99 and the bottom of the cloud for support. And there's a really good chance we break out here, but the same thing as I showed you on the other ones with the hourly's turning down. Now, in this case, the Stoke on the hourly hasn't been that reliable, but the 4 hour's been locked in, so I'm going to take the risk and jump in based on that 4-hour model, and I will keep you guys posted. I'm going to share this one publicly, too, not just with the group. All right, stay tuned for updates.